Welcome to Uncollectible Accounts Receivable, Part 4. By the end of this ACLET, you should have some tools to use in accounting for uncollectible accounts receivable using the allowance method. This ACLET is a continuation of Uncollectible Accounts Receivable, Part 3. You may be relieved to know that this ACLET does not introduce any additional material, but instead provides mechanical shortcuts that may make using the allowance method simpler even as your understanding of the method increases. First, just a reminder of the three concepts that are the keys to the allowance method of accounting for uncollectible accounts receivable. First, every time a company makes a sale on account, it incurs some bad debt expense. Second, the matching principle says when you incur an expense, record it. And third, every time a company makes an entry to accounts receivable, it must have a customer's name to go with it. Despite the complicated theory, accounting for uncollectible accounts receivable using the allowance method involves only three basic transactions. There's the adjusting entry to record bad debt expense in the accounting period in which the related sale was made, increase bad debt expense on the left, and increase allowance for uncollectible accounts on the right. Then there's the write-off entry, when you know whose account is uncollectible, decrease allowance for uncollectible accounts on the left, and decrease accounts receivable on the right. And there's the reinstatement entry, the reverse of the write-off entry. So increase accounts receivable on the left, and increase allowance for uncollectible accounts on the right. Let's go back to the adjusting entry for a moment. There are two ways to calculate the amount for the adjusting entry. There's the sales or revenue approach, in which you multiply an estimated percent of uncollectible sales by sales for the accounting period. And there's the receivables approach, in which you take bad accounts receivable and subtract the right unadjusted balance in the allowance account, or take bad accounts receivable and add the left unadjusted balance in the allowance account. A final hint, when you're presented with information for compiling the adjusting entry for uncollectible accounts receivable, look very closely at the wording. If you see the word receivable or outstanding receivables or accounts receivable, you'll have to use the receivables approach the hard way. On the other hand, if you see any of the following, sales or net sales or on account sales or sales revenue, service revenue, you'll use the simpler approach. And a final reminder, remember that these shortcuts should be used as a learning tool. After you mechanically assemble a journal entry, take a moment to think about what's happening to the accounts and why. This concludes the ACLET, Uncollectible Accounts Receivable, Part 4.